New York session has this one hidden trap, and it is one of the main reasons traders end their day red. And I'm going to explain to you how to avoid this trap that happens very, very often during New York session, ending in your day red and has ended my day red. It is extremely easy to avoid, and it's something that's going to increase your profitability during the New York Stock Exchange Open. So I'm going to dive into how to avoid this trap and actually how to profit off it. So hopefully this video helps, and let's get straight into it. All right, here's an exact example where we have NY Open, price pushes up here on NASDAQ. Everyone looks for buys, continuation buys, lower time frame structure to continue buys. It gives you some profit, boom, snaps back, ends up reversing. How many times have you entered a position just for it to reverse the other way, right? Common trap. This is a trap that happens. NYSE Open, this is NASDAQ, US 30, same type of trap. Just before the open, we're looking super bullish, changes of structure, closes above, we think for a breakout. We get the breakout, comes close to TP. Now, you can argue that you could break even here, but you see move went down, trapped. Then we get the real move, and it's just confusion because you don't know which way to look for, and you're initially taking sells, buys. You don't know which way to, what clarity of direction, what you should wait for. That's what I'm going to explain. We also see it on gold, although not as common on NYSE. It does happen during the NY session and even the London session on gold and all these pairs, which is, look at this. So we're forming support. We form a support candle. We break the high. We go in a bit of profit. Boom, traps, goes towards the downside. And all of this can be avoided by using this one simple indicator and the process I'm about to discuss. So the first thing you want to do is you want to go to TradingView and you want to search TradeSharp session bias. This is going to be an indicator that indicates what the session bias is doing. Now, session bias is extremely simple. If it's flagging bullish, means you should only be looking for buys. So if there's a sell setup happening at the open, don't trust it, stick on the buy side, okay? Because when we check the 4-hour time frame, we can see we get a 4-hour candle close right before the open. So let me go ahead and show you here. If we put trading sessions, we can see that this 4-hour candle close, if I go next, boom, this is the New York trading candle here. So this is the 4-hour candle close we get during New York. So we always get a 4-hour candle close just before New York, and that will lead direction. So how this works is I'm going to show you. If we have previous daily bullish and previous 4-hour bullish, meaning the previous 4-hour before the New York session open, it's going to flag bullish bias, meaning you should only be looking for buys. If we have previous daily bearish, previous 4-hour bearish, it's going to say bearish and we should only be looking for sells. Now, if they change like daily's bullish, 4 hours bearish, you're just going to flag a mixed bias. And that's where you can get a scenario that's actually very similar to this one, where this is a mixed bias. We had previous daily bullish, but previous 4-hour bearish. And that's where you should be looking on the open to take these pullback sells, right? And you're actually allowed to trade both directions. But in order to avoid this trap, you want to be trading with the overall analysis, which I'm going to teach you how to do, and also use this indicator. Because let me explain how this is actually trapping. What essentially happens is we come to the market and we're looking for a specific trade. Okay, so I'm going to explain the exact trade we want to look for. At the open, we want to look for either two things. We either want to look for a range and a break above the range that is going to be known as a setup 1. I like to do this on a 5-minute time frame. Okay, so that's one of my favorite things to do is to take this on the open. On NASDAQ, on gold, I like to use 15-minute time frame. Anywhere in New York session, even London session. Now, if the bias is bearish in this scenario, you're probably going to end up with a fake out here. Okay, so that's where it's going to trap, and that's the differential. And of course, if there's resistances, I have so many videos speaking about this. You can go watch any of my NY videos on my channel. Leave a subscribe and like, by the way. It does help the channel and I would appreciate it. And I do read all your comments if you want to ask something. You can have a look there at all the different content of my setups. I have them on the channel. I will link maybe a video above there to help you guys. The second setup is actually going to be, and this is where most people get trapped, is we see something like this, market moving up, we start to move down, and in New York session, this is NY, right? We can visualize this if I bring back sessions, right? We start to move down in New York session here. This is the New York session. This is where people, oh, New York is selling, I should start to take sells in here. They start to take sells in here. By the time you have your confirmations, you're selling lows, you get caught out, you get trapped, and then price continues the other way, but bias was bullish. We're actually going to look at this example because this was a good example of this happening. I'm going to show you this step by step, but I don't want to use TradingView replay. I'm going to show you this example step by step of exactly how you take the strategy and find the entries, because this is very, very powerful to just put these things together. And I'm making it super simple how to look for the entries. You can watch the other videos for more in depth, but I will talk about it here. So let's go here. So I'm going to use a simulator here so we can simulate. So as we come into New York session, most important thing here is going to be what? We can see prices moving down here, closing below levels, starting to break out. What is previous daily, guys? Remember what we learned about bias? Previous daily is closing what? Bullish. Previous 4 hours closing what? Bullish as well, right? So that's giving us that bullish bias. That means this downside move, I'm not going to allow it to trap me. I'm not going to allow it to trap me and for me to rip a sell here. I'm going to be looking this as opportunity for upside. Okay? So personally on, NASDAQ and stuff like this, I like to trade on the 5. A simple setup of mine is liking to see support candle form, meaning bullish candle closure. This area here acts as an area of trading, right? I call it an LTA area, low traffic area, lobster trading area. It's a clean zone that I can take the trade in. All I wait for is a 5-minute candle close back inside this support. So we can skip here by 5 minutes. So actually we went lower here, so I don't need to wait for it to close back in the support. I just need to wait, boom. So that's your first candle here. We can see it wicked into here. I could essentially take this to take the wick fill. As an example, I'm going to show you here. But this is where we want to be trading on the other side of the market, meaning we don't want to be selling. Many people, okay, this is a retest, let me sell. No, bias is bullish here. So instead of taking a sell, this is exactly where I want to be taking a buy here, for example. So as we can see, next candle comes through. Stop loss, where would you put stop loss in this scenario? Very important to put stop loss where? Let's go to our positions here. Using Pip Labs for this is I would want to put my stop loss below the candle here. It's very important to put stop loss below the candle. Now, if we start rejecting this range again, that's where you can manage, but we want to be on the right side of the market. So essentially, we're expecting this to be an upside move. So any way of getting in is going to be valid, and already you're past a 1-to-1 here. Your 1-to-1 was $300, and you can see how just being on the right side of the move allows you to capitalize off this area. And also, it's pretty hard to lose a trade if you're finding an entry and you have this much bullish momentum, right? And the reason, if we look at the examples here, if you were a seller today, that is your sell, break of this low, right? Remember, pullback, this is a pullback, creates your clean zone, sell. You're okay. It's pretty hard to lose a sell in that. Again, here, this is a difficult one, why I wanted to also discuss this one. If you're mixed bias here, you could be a buy here, but if it doesn't continue aggressive break even, then you're a buyer again here. Pullback. Same type of setup, pull back, create your clean candle, maintain on the buys, take it break of high. Here's another trap. If you're maintaining to be a seller, you're not going to be taking buys, trying to repeat this move back here, and you're going to avoid the trap maintaining with the sell. So this is how to avoid a trap. If you'd like to trade with us and see my entries and trade live with us in New York session on a day-to-day basis, you can check out the first link in the description. Make sure to follow me on Instagram, posting a lot of stuff there. Take care, trade sharp. Hopefully catch you guys very, very soon. Peace.